prior to the previous halvings, Bitcoin always kind of like sold off a little bit, and it was always after the halving that there was a hyperbolic move up.
Right.
That's different this time. It's going up before the halving,
Mm-hmm.
and so you have to be like, whoa, this thing is going to explode.
Right. So this time they launched. I think it's been about a month, 6 weeks since they approved, I think, 12 Bitcoin ETFs, one of which was Grayscale, which was kind of a trust before,
Yeah.
and then it converted to an ETF.
Yeah.
So I think I saw an estimate yesterday that these ETFs are buying $500 million worth of Bitcoin per day in order to keep their things, because there's so much cash inflowing to these things.
Right.
So that is a new component that it has not been there in previous halvings. So I would buckle up. Buckle up. All right, welcome to the Angel Research Podcast. My name is Jason Freert, and I'm here with the man, Brian Hicks. You are the man. Co-founder.
Tell my wife that.
Co-founder of Angel Publishing, and I would say investment director of the newly launched Rich Report.
Correct.
So you're back in the game. You're back in the newsletter game, finally.
Yeah, I've really never left.
Right.
But, 'cause I was sort of I like to consider myself sort of the philosopher king of Angel. And so I sort of was imparting my philosophy to all the editors here without really running specifically a letter. But now I'm back, right? Because for several factors, but I think we're in the first inning of another historic generational wealth building bull market.
Right. And I tend to agree, and it seems like we have to start out. It is February 29th today, so leap day.
Right.
Once every 4 years. But as of this morning, Bitcoin is trading at $63,000 a coin.
Right.
And so we'll back up to, what was it, November of 2022.
Right.
We might be able to roll in a clip here at some point of us.
I'd say we roll in that clip.
Bitcoin dropped, I think last night it hit like 15,000 and since bounced back up a little bit. Any takes on the crypto market? Are you a buyer here, Koifi?
I stopped messing with that stuff last year, honestly. I think that the worst buying indicator I've ever encountered in crypto is myself. So I don't get it. I thought I did. The amount of transparency overall in the sector, I think, is severely lacking for any normal people to make any normal prognostications, and this is a perfect example of it. The founder of Binance, nobody knows anything about him, right? Nobody knows what he's worth, and so situations like that is what turns investment into gambling, in my mind, at least. So I have heard all of the theories as to why this is the future of money, and I'm going to probably stay in stocks myself.
Gotcha. Well, yeah, I'm on, I don't disagree with you, but I do obviously dabble in the crypto, and just the contrarian indicators that I got over the past 2 days from friends and family, like asking
if it's time to buy.
Yeah. And then exactly.
Time to buy or time to sell?
Well, it's been mixed. So the people that I have been conversing with since, I was first in crypto hard, in 2012 to 2014, they're asking to buy. And I said, yeah. So because I think this event is pretty a big event. As far as, basically the exchange is in the Bahamas, and it was over leveraged, and the guy, I don't know exactly what the deal was. He asked the Binance guy to basically buy him out because they had the FTT tokens on their balance sheet and were gonna sell them. And I think he basically was like, look, if you don't buy us out, like, your tokens are gonna end up being worthless, and and it might echo through the entire market, which it kind of has. So it's a pretty big event, and the fact that it has shown a little bit of resiliency as far as like, I say only going down 20%. I mean, that's like kind of normal in crypto. So I think this might be the final shakeout before we get ready to head up of
For proof.
us basically calling the bottom
Right.
within a couple of thousand. You know what I mean? I think
Yeah.
I think Bitcoin bottomed during that period at $16,000.
Yeah.
I think when we were recording that, it was maybe 16, 17. But basically, the impetus for that sell-off was the FTX situation was going on with Sam Bankman-Fried.
Yeah.
And everybody was just like, crypto's done.
Right.
And, it was so hated that, of course, as a contrarian, we said, we got to buy, right?
Right. I mean, what's one of the triggers? What the age-old quotes that great investors always say: "Buy when there's what?
Blood
in the streets." And in November of 2022, there was a lot of speculation, a lot of pontification that this was the end of crypto. This was the end of Bitcoin. And when you start to hear proclamations like that, back up the truck. And on that podcast, I didn't say Bitcoin was going to double, but I said it was the bottom. And I think, Jason, since that podcast, Bitcoin is up, I want to say, almost 300%.
I think at least,
Yeah.
because we're above.
That's
60.
crazy, though.
Yeah, it is. I think no one really. But here's the thing: is, and this is so we're approaching what's called the halving, right? So I think it's about 45 days away. And just for people that are unaware, the halving is a built-in function in Bitcoin, which makes it reduces the Bitcoin reward by half.
Right.
So the same amount of sort of GPU or energy or processing power it takes to mine one Bitcoin currently, you're only going to get half. So it's a built-in thing to make it more difficult,
Right.
and to sort of it's a built-in economic function. Now, as the price goes up, though, that's also sort of an economic function because your reward goes. So if you were mining one Bitcoin back when it was 15,000, and now you're mining one Bitcoin and it's 60,000, your incentive is much higher. Right. So it sort of is a built-in adjustment as the market goes. Sure. And so I compiled some stats here. So this is the fourth halving, which is not that long ago. So the first halving was in 2012, late 2012. So 13 so years ago. The reward was 50 Bitcoins and it went to 25, so it's a half. Back then, it peaked about a year later at $1,000 a Bitcoin.
Wow.
Which was 10 times. So it was about
Right.
$100 per Bitcoin. Then, which is actually when I first bought Bitcoin. I sold most of it when it went up to 1,000 during that, and I was like, yeah, hell yeah! I should have held on.
Yeah,
that's the hardest part. So 1,000. So it went from $100 to 1,000. So a 10x gain in about a year from Bitcoin after the halving, right? The second halving was 2016, so it happens approximately every 4 years. The price of Bitcoin had fallen to about $600, and then it hit a peak of 20,000 after the halving. Okay, so that was about 17 months after the halving, it hit that peak. The third, 2020, okay, it had fallen back down to $8,600 per Bitcoin. And 11 months after that, it hit the all-time high of, I think it was 68,000, and we're now close to that.
Oh.
So if you follow that trend,
Right.
what it is at the halving, and then about a year later, it's on average like 10x.
Right.
So basically, we're followers of history here. What does that put us at? $500,000 Bitcoin. Like, and it seems ridiculous to say, but at the time, back in 2012, saying Bitcoin was going to go to 1,000, you were nuts,
Right,
And now
right.
we're sitting here like, oh, that's the cheapest thing ever.
Well, I mean, you've made a prediction, right? Where you think it's going to go by the end of this year.
Oh, it will be at least over 100,000 by the end of the year.
Yeah.
I'm very confident in that. And I think once it breaks that, it's probably going to be off to the races
Yeah.
because we're just talking about the halving right now. But there's the other component of it, which is new this time, which is the idea of these Bitcoin ETFs.
Right.
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 And so that's how you played Bitcoin this time around. When you called the bottom, you were invested in
Grayscale.
the grayscale. Right. And so you rode that up.
Well, look, I sold a few weeks ago.
Right.
But Grayscale, since the podcast of November of 2022, Grayscale is up 500%.
Yeah.
So that's what, 14 months, 16 months ago, 500% gain. I obviously, I'm always early.
Right.
I'm always a little too early. But we were talking earlier before this podcast, I will look for another re-entry.
Yeah.
Once there's a sell-off, and there will be a sell-off.
Yeah, there always is.
There always is, and I'll be ready. But to your point, Jason, about the halving, I looked back at history, and prior to the previous halvings, Bitcoin always kind of like sold off a little bit, and it was always after the halving that there was a hyperbolic move up.
Right.
That's different this time. It's going up before the halving,
Mm-hmm.
and so you have to be like, whoa, this thing is going to explode.
Right. So this time they launched. I think it's been about a month, 6 weeks since they approved, I think, 12 Bitcoin ETFs, one of which was Grayscale, which was kind of a trust before,
Yeah.
and then it converted to an ETF.
Yeah.
So I think I saw an estimate yesterday that these ETFs are buying $500 million worth of Bitcoin per day
Ugh.
in order to keep their things because there's so much cash inflowing to these
Right,
things.
right.
So that is a new component that it has not been there in previous halvings. So I would buckle up. Buckle up.
It's a great time to be alive. It's a great time to be a trader. It's a great time to be an investor right now. So.
Absolutely. So we were talking a couple days ago about just how much cash is still on the sidelines too.
Yeah, and I did some real quick research, and right now there is a record $6 trillion of cash sitting on the sidelines, and that's, in other words, that's not in the stock market.
It's in savings accounts, money market accounts.
Savings accounts,
yeah.
money market accounts.
Very liquid stuff.
Buried in your ground or whatever. And so the argument is that the sort of the traditional argument is that once that cash starts getting deployed, it's going to push the stock market way higher. And Sarah, I think I have a chart showing the cash sitting on the sidelines. I think going back to 1990.
Mm-hmm.
And I'm still doing some analysis on what that means and how historically it's driven the markets. But there's a lot of dry powder out there.
Right.
And
what has been the holdup, you think? It's just high interest rates. So, I mean, I know personally when the market was so choppy the last couple of years, it's like, well, I can get 5% in a savings account. Like, why would I
think
risk?
I think that's part of the equation.
So, do interest rates need to come down for that to be deployed,
I think
or just the
interest
market
rates-
needs
yeah,
to
right.
keep running?
Right. At some point, the Fed's going to cut rates, and there's been a lot of speculation about when they're going to cut rates this year. Eventually, they will. And why do they cut rates? To stimulate the economy, to get that cash out of those money market, savings accounts, and deployed into the economy to stimulate the economy. So when that's going to happen, everybody thought it was going to happen in June. I'm not sure if it's going to happen in June, but it's going to happen at some point this year. Once rates come down, and these people that are holding cash realize that they can get a better yield in the market, They're going to flood the market with all this excess cash, and that's going to push stocks higher. The other part of this equation, Jason, that isn't being talked about, and perhaps, Sarah, we can put this chart up, is for since 2022, there's been a record number of Americans retiring. And that has all kinds of economic implications. One being, I think the labor market is going to be hot for a long time because you have all these Americans retiring, and so these jobs have to be filled. The other part of the equation of this that relates to the cash sitting on the sidelines is these retirees just might be, hey, I'm retired now. I want safety. I want a consistent yield. I'm getting 5% or whatever it is, and so I'll take that for now. However, if rates starts to drop again, they're going to want to look. They're going to start deploying that cash into other high yielding instruments. High dividend paying stocks, REITs,
Right.
things like that. So I would be, if you're not already buying the stock market right now, this week we've had pretty significant pullback. I would be buying right now because this bull market is just getting started.
So what specific sectors are you thinking for buying? So I know that the NASDAQ has been nuts. There's been the whole AI sort of trade, but you tend to, go after these dividend stocks. Are we just buying the market straight up? I know you like the triple Qs. Like where are we looking at in terms of specific sectors?
Well, a lot of people don't know. Everybody talks about the Magnificent Seven, and it's not a broad-based rally. That's bullshit. 26% of the S&P 500, over 120 companies, have made record highs just this year alone. And guess what sector is leading that charge?
What?
It's not technology. It's industrials,
Really?
like Caterpillar and companies like that. So I would, if I was, tech has had a huge run up, and I still think it's going to. I think it's going to run up for the next several years. I'm putting, every time I get available capital, I'm putting it in I'm spreading it out, but I'm still putting it in the triple Qs. But I'm also putting it in the S&P 500 because I think the Dow and the S&P 500 have to have some catching up to do to the NASDAQ. The NASDAQ was up, 45% last year? The S&P 500 was up 24% last year, which we called in November of 2022. We called it. But those two, the S&P 500 has some catching up to do to the NASDAQ. So it's a party. It's, a rising tide lifts all ships. So you could pretty much, just, buy the market and do pretty well.
And you are correct. You did make that call when a lot of people were saying, I guess they were scared, right? Oh no, we're going to have this like prolonged downturn. A lot of quote unquote Wall Street money managers were saying this. And you've been sharing a personal story of someone that that their money manager seems to have gone that route, and it's very disappointing.
Yeah, his name is Matt. He's my neighbor. I've known him for 20 years. Very successful and savvy businessman, and the way he makes his money might surprise you. He's a farmer. He owns a little boutique farm in Carroll County, a 4-acre farm, and what he does, he grows very, unique crops. And when I say unique crops, he grows microgreens like wasabi and sunflower.
Oh, wasabi! You
Yeah.
love wasabi.
I do. But he's done very well. Him and his wife just bought a vacation home in North Carolina on the shore. They go down there every weekend, and he's looking to. He's only a year older than me, and he's looking to retire down there. But the other day he was telling me he might have to delay his retirement because of what his money manager is doing for him in his portfolio, and he was a little ticked off the other night because he just got his 2023 returns from his money manager, and his portfolio that is professionally managed returned 16% last year, and that's versus 27% for the market, and that's just the market.
Yeah.
That's not beating the market. That's just what the market did last year, and Matt knows what I do for a living, so he's always picking my brain, and I'll tell you a quick little story later. But I told Matt, I was like, give me your returns for the last 5 years from your money manager, and he did. So in 2019, Matt's money manager returned 8.9%. The market returned 29%. In 2020,
I'm sorry, 8.9 versus the market was 29.
29. In 2020, the COVID crash, everybody was scared, about COVID. His manager returned 8.7, market returned 22%. 2021, his manager returned 15%, the market returned 30%. 2022, it was a return of negative 14% for Matt's portfolio. The market returned negative 16%. So
that was the one time he beat the market by 2%.
And so in 2023, like I said, 16% for Matt's portfolio, and the market returned 27%. So
that is just abysmal. How does that person even still call themselves?
Yeah, well, they're not. There are many reasons why, Jason, and we can talk about that maybe on another podcast. And we've talked about this extensively about how money managers are not market philosophers. They're salesmen for a family of funds that they get commissions on. But let me just go back to Matt. Had Matt started in 2019 with $100,000 in his portfolio, at the end of last year, he would have ended up with $134,234. Had you just done what the market did, if you just bought index funds at the beginning of 2019 with $100,000, by the end of last year, you would have ended up with $217,695. So it's a huge discrepancy.
I'm sure you didn't even. I'm sure this money manager is charging a fucking fee too.
So
right,
yeah, absolutely.
So that eats into the returns again.
So and because Matt's a farmer, and one evening we were talking shop. I was talking shop, and I was talking about, hey, I just bought this cannabis REIT, and that it piqued Matt's interest because he's a farmer. He checked into it, and he went around the objections of his money manager and purchased innovative industrial properties. IPR is the symbol. He bought it for $42.50 a share, and he made a small fortune on that cannabis REIT. But one of the more interesting stories that Matt told me was that his money manager was like, "Where are you getting these? Where are you getting these recommendations, these stock ideas?" So
Wealth Daily,
yeah, Angel Research. So that if there's, in a nutshell, if there is a thesis of why we are valuable to investors, that is probably the best example that I can give anybody. Is that number one, you're going to do better. You're going to do better than a money manager if you follow our stock recommendations and our stock advice. And two, we consistently beat the market. We just don't do as good as the market. We do better than the market, similar to the way a professional golfer regularly beats par. Right? A professional golfer beats par frequently. And that's how you have to view us. Is that we're sort of the professional golfers of the stock world. We're constantly beating par.
Right, because this is what we do. Right, day in and day out, are researching, and that's always the money manager sales line too. Right. It's like, oh, we're professionals, we're fiduciaries. This is what we do.
Right.
But like you said, they're not. Their goal is because they're actually managing your money and they make money off of either like some sort of fee, not necessarily a performance fee, just a percentage of assets. Let's just say like 1%,
Right.
sometimes more, sometimes a little less.
Right.
And they're underperforming the market. And their goal, once they get your money, is to have you not take your money out.
Right.
Right. So, whether they, like I said, even when they lost 14% in the market, they're still collecting a fee on there. As long as you don't redeem and move your money and manage it yourself or move it to a different bank or another money manager, they're just sitting there collecting. So that's why when you hear these guys like, oh, this money manager has X number of dollars under assets, that is the goal, is to get your assets as high as possible because you're going to make a percentage off of that no matter the performance. If you can just convince those people to stay with you. And that's why it's pretty disingenuous. And that's not to say there aren't great money managers out there, but usually they're the guys that you've heard of that are the hedge fund managers where you need excess of millions and millions of dollars with these guys.
Yeah.
And that is not your average, person. We're talking your average person. They're trying to save for retirement. They're trying to, maybe they have a couple $100,000 or less. Maybe they have $1 million, but they don't, you know what I mean? They're trying to save for retirement, and they do not, and they're basically getting screwed by these guys on top of the fees. We've talked about this before. You can do it yourself. It's not hard, and that's basically why we exist.
Jason, here's a really good example, and maybe you can explain this one. When was the first time Angel Research, one of our editors, talked about Bitcoin as an investment?
Oh, I mean, it was before 2012.
Right. Imagine taking that idea to your money manager in 2012.
Yeah.
It would have been, are you crazy?
Right.
And that's why we exist. We are going to talk about things that we believe are going to be, super hot in the future, and become almost market norms. Bitcoin now is a market norm. Cryptocurrency is now a market norm. There are literally public companies that basically exist solely to buy and manage Bitcoin. Right.
MicroStrategy.
Exactly.
Who also recently just bought 3,000 more Bitcoin.
Right. So, when you subscribe to our services, you are going to get, recommendations on things you've heard of. I like the triple Qs because it's something I can just plow money into and forget about, and it's going to go up, because I think it's going to go up. But then you're going to get recommendations like Matt did in 2018 about an obscure cannabis REIT that nobody knew about except for us. And that, I bought that cannabis REIT, I think, for like $19 a share. Sold it at 80. But then it went on to do, I think it got as high as $270 a share.
And it was paying dividends the whole
And it was
time.
paying massive dividends. And today, that same cannabis REIT, IIPR, currently trades for about $100 a share. So those are the kind of recommendations you're going to get. Exciting stuff, you're not going to hear about from your money manager. Stuff that, when you take that idea to your money manager, he's going to try to talk you out of it.
Yeah.
So
it's almost a contrarian way to test it.
It
right?
is. Totally.
It's very interesting, and it all comes down to people's risk tolerance, right? And what they want. We just had Alex on here, and he loves risky investments.
Right.
Doesn't say he's not all in on risky investments.
Right.
If people want to, just do dividend stocks, I think that's the main focus of your letter, the Rich Report. But there are some other services that we have that focus on different sectors. So it's sort of a pick your own menu of what you like to invest in and learn about too.
I think, Angel is, I like to, I think we're holistic in that regard. We're sort of a one-stop shop for whatever tickles your fancy, we have it for you. Or you can use all of our services to build a complete, comprehensive portfolio. You know, me and Jason Williams from the Wealth Advisory, we stick with, you know, um, passive income producing investments. At the very opposite of that spectrum is Alex Koifman, who loves microcap stocks, and then we have everything in between. So if you're looking for a complete portfolio platform, we've got it for you.
And we don't take a performance fee.
We do not take a performance fee, and we don't get paid for recommending. We don't get a commission for recommending any stocks.
Yeah. So sounds like a win-win to me.
Yeah.
All right. So I appreciate you coming on. Is there any bold predictions that we're going to see besides just we're rip-roaring from here?
Well, I made a prediction in our November 2023 podcast, and that was our market forecast. And I made a prediction that the S&P 500 was going to hit 5,900, and I didn't commit. I was like, well, it could happen this year. It could happen within 2 years, because this year is sort of, there's a lot of things going on, the presidential election
Right.
and all this stuff. It looks like I may have underestimated that. Seriously. So, with Bitcoin, we talk about this thing called the greed trade's back on. The greed trade is definitely back on, and you can see that in cryptocurrency. And once the fear of missing out crowd, because I think there's a lot of people that are still sitting on the sidelines. They felt, kind of burned by COVID. They felt kind of burned by the Bitcoin crash of 2021.
Yeah, there's still a lot of PTSD, I think, that over the past, year or two.
Totally.
I mean, obviously the market was up pretty significantly in 2023, but it's still 2022 was a bad year.
Yeah.
And like you said, a lot of people were burned. They're hesitant to get back in, and once everybody piles in, game on.
Yeah, that's the other thing I would, one of the takeaways is that usually the John Q investor in America is usually late to the party. So if you consider yourself a savvy investor, which I know you do, you're probably already in the market, and you should be buying more now, because 3 or 4 years from now is when really the FOMO people are going to be rushing in, and when they're rushing in, you're going to be selling it. You're going to be selling your stocks to them at a huge profit.
Absolutely. All right. Thanks again, Brian. You can subscribe to Brian's newsletter, The Rich Report. We'll put a link in the description below. And don't forget to like and subscribe on our YouTube channel, and hit follow on the podcast platforms. And thanks again.
Thank you, Jason.